Happy Monday, everyone. It's a new start of the week, and we're going to have what seems to be, from the perspective of what kind of news we're getting this week, a little bit quiet at the start, and then I believe the volatility will pick up Thursday and Friday. Now, what do we have to mind that volatility? Today, we don't have any particular news on the USD side. Sorry, I take it back. We do have some PMIs, manufacturing PMIs. This is supposed to arrive when New York is opening, so it's going to be the initial start of the session volatility. Then we have a bank holiday in the States tomorrow for Independence Day. Now, lower volumes doesn't necessarily mean lower volatility, and I have noticed that it's the same amount of volatility at the start of the session in New York as with any other regular day. Wednesday is when we have the FOMC meeting minutes. Now, what has come out from Chair Powell and generally central banks is nothing new. So the market, again, if it's not presented with anything new, it's going to continue to lift. Thursday and Friday is where we have the job openings. It's always a challenge for me to say it. And then we have the non-farm employment change. That is the employment rate and unemployment rate on Friday. So Thursday and Friday, in my opinion, are going to be more volatile than Monday and Tuesday. Again, if you're not in a position, I would be waiting for the initial 90 minutes of the New York session to take a position. I would be very mindful in both directions at the moment. If you haven't started longing at the bottom of this consolidation for both ETH and BTC, I suggest you wait until this move is finished. There are some percentages left in this move, but it's not the technical trade to make, in my opinion. Again, it's just my perspective. I would be waiting until I have a much better entry at the bottom of the consolidation, or at the top of this for the correction downwards, because there will be a correction downwards. I'm going to start with BTC just to show you where we are on the daily and the weekly. It's going to be a short session today because I don't have any changes for BTC compared to last week. Here are the daily levels that I mapped out last Monday. What I did here was I lifted up the support slightly so it looks like it's being back tested, and right now we are at resistance, pushing on resistance. Generally, when BTC does that, it wants to lift one more leg up. Now we have a descending downwards stochastic on the daily, and the MACD on the daily doesn't look convincing to me. That's why, again, I'm choosing to be patient. Again, it's my conservative way of reading the charts. And if I am to look at the 1 week, sometimes TradingView plays tricks on the reload. We have the bullish signal here with a 20 crossing over the 55. We have again, I'm not liking this candle. This to me is a weekly pivot. The way we closed last night, we didn't break a weekly higher high here. Again, I'm not mad on this. That's why, again, I am choosing to be quite mindful and patient when it comes to taking the next position. There is a lot of profit to be made in the consolidation. Right now we are either at the top of the range or on the verge of breaking out. But again, if I hadn't taken a position right here at the bottom, now I choose to wait for this move to be finished. So what am I what am I trying to say here? If I'm looking at the weekly and the daily trend, the weekly MACD is up, but the volumes are not convincing. They're not strong. To my mind, this is again, it's not as strong as I'd like it to see compared to what's happening on the MAs in terms of the signals on the MAs. I would be to me that the ranges right now to trade are 15-minute ranges in the 15-minute space, so between the 30,000 and 31,000, which is not a super duper large space. It's at 3.3%, so, but that's what's being offered right now. It's very, very small. This is what summers are like. They're called washing machine summers. We will see a spike outside of this range, either to the upside or to the downside. This morning, I've already posted in the chat. I'm watching two patterns. You know, I am watching my patterns for direction. So I'm not trading the patterns. I'm trading the ranges, but I'm watching the patterns for direction. So here is the symmetrical triangle at the top of this. It could be a bull movement, a bull flag on the 4 hour, and we have 3 touches to the top and 1, 2, 3 touches to the bottom. So we are prepared to move either way. 33K would be the break upwards, 28.2 would be the break downwards. So to summarize this for you to have an idea, for BTC we're still within the daily ranges. We haven't yet broken the resistance. If we do break it, I have 2 targets, 33K and 35K. These would be my next levels on the daily. The stock on the daily is down, but the weekly is up, so we might see a lift and then some more arranging sideways, which would be historically what happens in the summer. So we would have a sideways consolidating summer. Now, ETH has been a little bit more volatile lately because it's done what BTC did last week. Well, it's on its way to do what BTC did last week. I'm going to lift this resistance a little bit higher. There we go, up to here, just to reflect the previous level. We have a you know what? I'm gonna leave it here because it's right in the middle. It's where the past and the present meet here. On the daily, we've had the crossing of the 20 over the 55. The stock on the daily for ETH is to the upside, which is again, it's reverse from the from where BTC is. The weekly is up as well. The MACD is up as well. Again, not very convincing in terms of volumes, but quite strong because of the support on the MAs. I am watching also a pattern for ETH. Where is it? Just a second. That pattern is an ascending wedge. Again, ascending wedges could break. Here it is. Ascending wedges could break to the upside 30% of the cases, or to the downside 70% of the cases. So more chances to the downside or than to the upside. Both areas are areas of interest, which means resistance and support. So we would be falling right in this area of support that we haven't backtested. If we break to the downside, 1722, absolutely possible. And then to the upside, 2200. I have an area of interest of 2120. But that would be, again, a very conservative measurement of this wedge. I haven't taken the widest part. I've taken the let's say the 70-80% width towards the tail. So we are forming some structure. For BTC, it's more asymmetrical at the top, looking like a Super Mario flag, which is generally a pattern for reversal to the downside. But we haven't yet broken support. We haven't yet broken support on the 4 hour on either of them, so there's no confirmation. At the moment, the trend is to the upside because we are above all the EMAs necessary to continue to the upside. ETH keeps printing higher highs, which is great, but it hasn't yet met the previous highs that BTC has. So it's at the moment catching up with the previous high. So once it gets past the 21.30, the previous peaks in April, then it'll have caught up with BTC. So at the moment, we are still on our way to catching up with those highs. The 4 hour MACD is not looking particularly healthy, so I would say we are preparing for a drop for both of them. But until we break support, that drop is not yet confirmed, and I'm just a perma bear with a perma bear hat on, talking about a correction. So I don't have any position open in either ETH or BTC. I have a short position open in XRP. I will be waiting for the start of New York to see what kind of structure we have there. And if we print a double top structure on the 4 hour, I would be looking, or a lower high on the 4 hour, I would be looking for a short position downwards at the top of this range for ETH. I'm not looking to trade BTC because ranges are not profitable enough for me at the moment. Again, my perspective, but ETH has nicer ranges, nicer levels, so I'm waiting for ETH to top out and do a short position. I'll see if there is another backtest on the 4 hour with a higher high on the 4 hour. I am looking to take a position, but it's been quite tricky because of how spiky price action has been. So it offered golden pockets, but those golden pockets were in higher ranges, and then there was a V-shaped recovery. So it offered a golden pocket here, it didn't break this bottom, and then on the 1 hour it just did a V-shaped recovery, and this was a 20%. I should have started with 25% and then DCA, which would have been quite tricky because then this happened. So it is quite it's quite a wipeout territory right now with these spikes. Like, look at these spikes to the bottom, both to the bottom and to the top. So I'm looking and I'm waiting patiently for some structure, because the way I am using the stop loss right now allows me to put in more of my capital and have it protected. Basically, I'm waiting for the strong signals at the top of the range to show a correction downwards is coming. Now, that is it from me for today. I don't want to keep you any longer because I'll be updating you after the start of New York, with any possible structure for us to be trading on the 1 hour time frame. At the moment, what we seem to have is the 1 hour coming down, but I want to wait for New York to hit, because it generally has a tendency to spike the high, which means break the previous high by just a little bit and then do the 1-2 on the way down. So I'm going to be patient and wait for that. Thank you for today. Let me know in the chats if you have any questions, and I will see you tomorrow. Bye bye.